A Vietnamese electric car maker became the third most valuable automaker in the world in just 4 years and then lost almost half of its market value in just one day. That's the story of VinFast, a company that shocked and fascinated the world with its meteoric rise and fall. This video will tell you everything you need about VinFast's journey and why it reminds us of another epic market crash a year ago. We're talking about VinFast Auto Limited, a subsidiary of Vingroup JSC, Vietnam's largest conglomerate. VinFast was founded in 2017 as a car manufacturer and launched its first electric vehicle in 2019. The company has ambitious plans to become a global player in the EV market, and it has already established partnerships with some of the leading names in the industry such as Siemens, Bosch, LG Chem, and General Motors. VinFast made headlines in August 2023 when it went public in the US through a merger with a special purpose acquisition company, SPAC, called Automakēr Growth Corp. A SPAC is a shell company that raises money from investors and then merges with a private company, allowing it to go public without the hassle of a traditional IPO. SPACs have become very popular in recent years, especially for EV startups that want to raise capital quickly and take advantage of the hype around green technology. The deal valued VinFast at $15 billion, making it one of the most valuable EV companies in the world. However, that was just the beginning of its incredible journey. After its debut on the Nasdaq on August 15, VinFast's stock price soared by 688% in just 6 days, reaching a peak of $264 per share on August 23rd. This gave VinFast a market capitalization of $190 billion, surpassing giants like Volkswagen, Toyota, and Tesla. VinFast became the third most valuable automaker in the world behind only Apple and Amazon. But how did this happen? How did a relatively unknown company from Vietnam achieve such a stunning valuation in such a short time? Well, several factors contributed to this phenomenon, but the main one is probably the low supply and high demand of VinFast shares. You see, VinFast's SPAC deal involved issuing only 10% of its shares to the public, while the remaining 90% was held by its parent company, Vingroup, and other insiders. This means very few shares are available for trading on the market, creating a scarcity effect that drove up the price. On the other hand, there was a lot of demand for VinFast shares from retail investors attracted by its growth potential and its status as an emerging market leader. Retail investors are individual investors who buy and sell stocks for their accounts rather than their institutional or professional purposes. Retail investors have become more active and influential in the stock market in recent years thanks to the rise of online platforms that allow them to trade easily and cheaply. Some of these platforms also have social media features that enable retail investors to communicate with each other and share their opinions and strategies. One of these platforms is Reddit's Wall Street Bets forum, which has gained fame for sparking some of history's most dramatic stock movements. Wall Street Bets is a community of over 10 million members who describe themselves as degenerates who like to gamble on risky and volatile stocks. They often target companies undervalued or heavily shorted by hedge funds, hoping to create a short squeeze that forces the hedge funds to buy back the shares at higher prices, resulting in huge profits for retail investors. VinFast also embraced by Wall Street Bets as a meme stock in August 2023. Many forum members saw VinFast as an opportunity to make money by betting on its future growth and success. They also liked VinFast's story as an underdog from Vietnam who was challenging the established players in the EV industry. They started buying VinFast shares en masse, creating a positive feedback loop that pushed the price higher and higher. However, not everyone was convinced by VinFast's hype. Many analysts and experts questioned the VinFast valuation, arguing that its fundamentals did not justify it. They pointed out that VinFast was still unprofitable and had sold only 30,000 vehicles in 2022, a fraction of what its competitors had sold. They also noted that VinFast faced many challenges and uncertainties in its expansion plans, such as regulatory hurdles, supply chain issues, and competition from other EV makers. Some of these skeptics decided to bet against VinFast by shorting its stock. Shorting is a strategy that involves borrowing a stock from a broker and selling it on the market, hoping to buy it back later at a lower price and return it to the broker, pocketing the difference. Shorting is risky and speculative because if the stock price goes up instead of down, the short seller will lose money and have to cover their position by buying back the stock at a higher price. VinFast became one of the most shorted stocks on the Nasdaq in August 2023, with a short interest of over 30%. This means that over 30% of VinFast shares available for trading were borrowed and sold by short sellers. This created a tense situation between the bulls and the bears, the buyers and the sellers, the Wall Street Bets and the hedge funds. Who would win this epic battle? Well, as it turned out, neither side won. VinFast stock price collapsed on August 24, dropping by 44% in one day. It lost $83 billion of market value in a single session, wiping out most of its gains in the previous week. A combination of factors such as profit-taking, margin calls, negative news, and market sentiment triggered the crash. Investors sell to lock in profits and avoid losses. Retail investors cashed out of VinFast at record highs, creating selling pressure. Margin calls demand more money or securities from investors who borrowed to trade. Negative news around August 24 led to margin calls for VinFast investors. Market sentiment is an overall attitude towards a market or security influenced by news, trends, expectations, and psychology. In VinFast's case, market sentiment turned from euphoria to panic in days. The positive feedback loop that had driven up VinFast's price was reversed by a negative feedback loop that drove it down. The fear of missing out, FOMO, was replaced by the fear of losing money, FOM. The herd mentality that had led investors to buy VinFast shares en masse now led them to sell en masse. VinFast's crash was reminiscent of another infamous market crash a year ago, AMT Digital. AMT Digital was another US-listed company with roots in Asia that baffled market veterans by soaring more than 32,000% in a few weeks in August 2022. The money-losing financial services company paper value reached over $400 billion, exceeding that of JP Morgan Chase & Co. AMT Digital, which was also driven by low supply and high demand for its shares and by retail investor frenzy and meme stock status. However, AMT Digital's rally was even more irrational and inexplicable than VinFast, as there was no clear catalyst or justification for its valuation. AMT Digital was eventually exposed as a fraud after an investigation by the Securities and Exchange Commission, SEC, revealed that it had inflated its revenue, assets, and customer base and engaged in illegal market manipulation and insider trading. The SEC suspended trading of AMT Digital's shares on August 31st, 2022, and filed a lawsuit against the company and its executives. AMT Digital's stock price plummeted to near zero, wiping billions of dollars of investor wealth. VinFast's crash was not as severe or scandalous as AMT Digital's crash, but it still served as a reminder of the risks and volatility of the stock market, especially for new and inexperienced investors who chase after hype and speculation. VinFast's crash also raised questions about the sustainability and regulation of the SPAC boom, which has been criticized for creating inflated valuations and enabling fraud and abuse. VinFast is not the only EV company that has gone public through a SPAC deal. SPACs have been the preferred method for many EV startups to enter the market, such as Lucid Motors, Fisker, Nikola, Canoo, Lordstown Motors, and many others. Some companies have also faced scrutiny and controversy over their business practices and performance. VinFast may have a better chance than some in its peers, as it has the backing of a powerful parent company, a loyal customer base in Vietnam, and a proven track record of delivering quality products. VinFast also has a clear vision and strategy for expanding into other markets such as Europe, North America, and Australia. VinFast aims to sell 500,000 vehicles globally by 2025 and to become one of the top 5 EV makers in the world by 2030. However, VinFast also faces many challenges and uncertainties in achieving its goals. VinFast will have to compete with established players like Tesla, Volkswagen, Toyota, Hyundai, Ford, GM, and others with more experiences, resources, and brand recognition in the EV industry. VinFast will also have to deal with regulatory barriers, trade tensions, environmental issues, consumer preferences, and cultural differences in different markets. VinFast will also have to cope with the volatility and unpredictability of the stock market, which can affect its valuation and funding. VinFast is an exciting and ambitious company that has captured the attention and imagination of many investors worldwide, but it is also a risky and speculative investment that requires caution and prudence. VinFast's story is not over yet. It may still rise or fall in the future. Only time will tell if VinFast will become a success story or a cautionary tale. That's all for this video. We hope you found it informative and interesting. If you did, please give it a thumbs up and share it with your friends. And don't forget to subscribe to our channel if you want to see more videos like this. Thank you for watching.